Hey traders, Chris Pulver here. Welcome to the weekly outlook, and it has been a wild 12 to 16 hours since the market opened last night. 5 p.m. we had a oil crash. We had a flash crash in FOREX. U.S. markets halted trading this morning with the drops and gaps of greater than 5%. So we're seeing VIX at new levels with the volatility index. We see the U.S. market stalling. But like I said, hang in there because I actually just closed up for some profits. So it can be done. So let's talk about how you too can profit from market conditions like this when volatility is super high and things are changing every single day and there's never a dull moment in the financial markets. But let's get started with this week's outlook. Before we head into the charts here, just make sure that you're following me out there on YouTube and the social media platforms, which you can find me out there on Instagram at pulver.chris, Twitter at pulverchris, Facebook and YouTube. Just type in my name. I have a video series that's gaining some nice traction, getting some great feedback out there. Best trading strategy, keep it seriously simple. It's what we're going to do. The next module, the next video lesson is going to be trade size, which I think is so important. In fact, it's probably the most important thing, especially for times that we are witnessing right now in the markets with high volatility. We just had a flash crash. Markets are going crazy. Seems like nothing's making sense except for high volatility and panic. All right? But you have to remember that there is opportunities out there for us to make profits. So traders need to be positioned accordingly. And if you have positions that you're sitting in for longer term, fine. Figure out how to weather the storm and scale in and keep the trade sizes super small. If you're looking for day-to-day volatility, there are pairs that are moving every single day. There are stocks and instruments moving every single day. I have friends that are texting me, asking me about how do I trade the coronavirus? How do I trade the stock market? How do I trade the selling of the stock market? How do I trade options? How do I trade currency pairs? There are so many platforms and instruments you can trade. There's a lot of opportunity, so that's what traders are always looking for. It is time. Let's go into the live markets here. Now, I did mention what was happening overnight with the oil crash. Interesting developments on this front. We had OPEC meetings last week, and I'll give you the very simple version of it. OPEC was looking at cutting output by 1.5 million barrels per day. And they were waiting on Russia for their consensus on if they would participate in a part or portion of that 1.5 million barrel per day cut. And Russia says, no, we're good. We're not going to do that at all. And so the response from Saudi Arabia was, oh, well, rather than cutting, period, let's go ahead and increase production by 2 million barrels a day. And oil has continued to be drummed. So this is a daily chart on U.S. oil. We have been range bound since the highs of around 65 and the lows of around 50. Now, we did have some previous lows here. You can see the swing from $75 all the way down to $42 where we V-bottomed on December 26th of 2018. If we go back any further than that, we had our dramatic low and the bottom in the commodity world back in February 2016 when we were down with kind of no end in sight. How low will oil go? You can see that retested around $26. Now, interestingly enough, look and see where price crashed to last night. We have lows in 2016. We have lows from our flash crash move last night over the weekend. So as soon as trading started, oil was down over 20%. You can see that we're down 18.5% for the day. We had lows of upwards, I believe, into the 30% dropping zone. Now, again, it might seem like craziness here. I mean, we've been very careful about trading futures. We've been very careful about the markets as far as where oil is going because it has been so range bound. So between 65 and 45, or really 65 and 50, prices held pretty nicely. But once we started to break this structure, I know a lot of my hefty futures traders out there, once we started to break below 50, 49, it has been just nonstop pressure to the downside. And that is where you trail momentum. So for futures traders, I mean, a move from $47.50 down to $30 or less, that is an incredible amount of profit opportunity. Now, you also have traders that trade this way. Well, it's low, I'm going to buy it. And so they buy it here, they buy it here, and then they get crushed on that giant drop to the downside, even though this is most likely going to find a way to form some type of bottom. It, of course, will be interesting, and this is what I want to pay attention to. We're going to go into the Forex market in a little bit, and you'll see similar crashes in the Forex market on 1-hour charts and daily charts. You'll see these giant wicks to the highs and to the lows. All right, but there's some typical price action that I'm looking for off of these flash crash levels. And so since we have oil crashing down here towards the lows at $27.50, let's go. This is a daily candle. Now, this candle is not exactly a guaranteed bottom. In fact, I mean, a flash crash doesn't always guarantee we have a top or bottom, but there's a pretty good chance that there's enough damage done with flash crashes that retail traders are getting pushed out of those positions and they're getting margin calls, and it's tough to be on the wrong side of that trade. So this is why you opt to trade the trends. This is why you try to look at moving stop losses and trail that momentum and take as much profit as you can out of these moves. We did have gaps over the weekend as well. So my point is this. If we come back down to retest this low, here's what I'm looking for. If we retest this low, but ultimately test and fail off this low, we are probably going to carve out a bottom just like we did back in February of 2016. And from there, we pull back into the 40 zone. We pull back into the 45 zone. We pull back into where this all started here around $50. All right, so we're looking for some bullishness to actually pop up if we retest those lows around 27.50. Now, it doesn't mean that we can't go lower. We might, in fact, make it incredibly painful at 27.50 to get into 25, 24, maybe low 20s. But this is an unsustainable level for OPEC nations. This is an unsustainable level for even the OPEC bloc nations that are not officially members, but they're in that peripheral, like Russia. You know, I mean, from what I understand, Russia can't really operate with margins and be profitable if we're below $40. So it probably will have to take some united effort once again, and even if it's mostly US-based companies, that they start looking for hefty layoffs and hefty production cuts to try to stabilize what we just witnessed overnight, which is a giant 25 to 30% crash in oil. All right, but from a technical side, it's a bargain. If you're buying in the mid 20s to possibly low 20s, I would not want to catch this falling knife. What I want to do is I want to see what price does at the lows. So if we come back into retest and we see some bullish candlesticks, if we come back into retest and we possibly go slightly lower, but you have a disagreement between price and momentum, I'd look for bullish candlesticks. I'd look for smaller price patterns on smaller time frames, and you look to trade this back. I mean, let's say that we get a trade from $25 because we start to solidify some nice bottoms, and we go from 25 back to 50. That's a 100% move on a drop that was around 30%. So, I mean, it's all relative where you are and where you are positioned. So I'm looking for these levels to hold. And this is not just in oil, but also in stocks. If we take a look at the S&P, again, where trading has been halted. Here's the daily candle so far. We have some live price action going. Things kind of slowed this morning. But what's interesting is go to the weekly chart. I did a weekly outlook on this not too long ago, and I was looking at a kind of a Friday recap, and we are dropping into that 20% area. In fact, from the S&P high to the low from this week's open, we're sitting right around 19.3%, which is awfully similar to the drop that we had back in 2018 from December. This is actually the high in September, October, to the December 24th, 25th crash at the bottom. That was around 19.7%. And here we are with this crazy 40+% rally to the upside, this little melt up, as they say, and then we have just deteriorated by just shy of 20%. So is it a level to consider some buying with some flash crashes? Possibly. This is kind of the madness that gets everybody so panicked and so scared. But from a technical standpoint, again, no major structure damage has been taken on the weekly. So if there's an opportunity to buy, again, I'm not saying buy right now, but I would look for these areas to give us some confirmation and hold current levels and U-turn off of current levels and then take a jump to the upside. And again, what we don't know is that is there enough optimism out there right now? It seems like no, but is there enough optimism to get this back up towards highs? And in some weird, twisted way, with as extreme and violent and fast as this was, it almost wouldn't surprise me if this market finds a way to recover at least halfway or recover, heck, all the way, right? And all this was just this crazy, wild news cycle. It just panics everybody into the smart money buying at a discount, a 19-20% discount. And here we are with a 25 to 30% rally that gets us back up to the highs again. So we don't, of course, know what the next move is, but I will say this. There's still structural support right there. There's still technical support right there on the weekly chart. That is the S&P 500. If you take a look at the Dow Jones, same thing. That weekly 200 moving average, price just fell right in between. We have all these beautiful levels. A lot of support at the 200 exponential moving average, and we dropped right down to it. So can we hold that level? Very possible. Do we have a bullish candlestick coming next week? Do we have a bullish, and I would even say a bullish look to this week? If the week finishes like this, that looks a little bit more positive for recovery. I'm not asking for price to come back and retake the highs, but I'm looking for, can we have a high to low and even retrace a little bit? Can we retrace, 50%? Can we balance out this wild and crazy move over the next couple of weeks? I think from a technical standpoint, we absolutely can. So that's what I'm looking at right now. We had some flash crashes as well on some currency pairs. I'll show you that right here on the currency strength chart. This was overnight price action. We have, again, this vertical, this y-axis right here. We typically don't see many strengths or weaknesses above or below 100. A flash crash got us into 350. So this, again, is measuring volatility. We did have some 200 to 300 plus pip gaps and flash crashes last night. This is the Japanese yen showing a huge move to the upside. We also saw a flash crash on the New Zealand and the Aussie to the downside. But they have since recovered. In fact, look at your New Zealand, which is in pink here. New Zealand was one of the weakest currency pairs in the flash move and has spent the rest of the morning recovering. The yen, from the high of the flash crash, or in this case, the high of the yen strength, has spent the morning retracing. So you have these violent flash crash moves that are now coming back up and balancing where the flash crash started, filling some of those weekend gaps. And again, this lesson is all about price action during these flash crash moves because there is a lot of profit potential. So what did I do? I'm going to say that I'm fortunate. Number one, this is why when I do my video for trade sizes and leverage and margin, it's probably one of the best videos you need to pay attention to. All right, because it's opportunities like this where last week I'm looking at where my trade sizes are, what trades I'm in, what I'm exposed to, and I could stomach and sit through, and this is last night on my phone looking at very abnormal price movement. I mean, you don't oftentimes see a 5-minute candle that goes 200 to 300 pips. This is a 1-hour chart last night when the markets opened. This was the dollar yen here. We had a gap over the weekend. We closed around 105. We gapped below 105, which is a critical level of support. And that gap has not been filled. But guess where price is likely going to go? Okay, we have some short-term bottoms in here for now. Keep in mind that 100 is a absolutely critical support level for this dollar yen. I could see this being push, pause, gap, push, pause, possibly working its way down to these lows again, which is just below 102. We might even end up bouncing off of 100 and finding a way to fill the gap from there. So again, if you are bargain shopping, buying at 100 and going after a price fill of gap, a price gap fill around 104 to 105, that's a lot of opportunity for not a lot of risk. I mean, you could look at stop losses at 99.50, 9,900, 100 pips of risk going after 400 plus pips of reward. These opportunities are there. So if you are trend trading, you have that extra momentum in your favor. If you're looking to buy the bottoms or sell the tops, you have some really convincing candles right now that we can have a game plan for getting filled near these lows, getting some confirmation off the lows or off the highs to make some really nice profits. So for example, here are some of the Aussie pairs. We saw the Aussie have that little bit of a flash crash last night. And I say a little bit because I've been through 1,000 plus pip flash crashes. I was in Euro Swiss back in 2015. I was in pound pairs in 2016. We had oil and commodity pairs back in 2016 as well. That was in August. So there have been anywhere from 200 to 300 pip flash crashes to upwards of 2,000 pip flash crashes. So even a few hundred pips, it's still a crash. It's still a move. It's in the direction of the trend. And that momentum runs and it just gets to these extreme points. These flash crashes, I think, are really just this. It's an ugly cleansing of retail traders. Whether you want to admit it or not, it's an ugly cleansing of retail traders. This is the breaking point where most retail traders experience margin calls. But what I like, and I am a retail trader too, but having trade size and equity management under control, these flash crashes are also significant turning points in the market. And that's what I want to pay attention to. Look, this is the 1 hour Aussie Canadian. All right. Now, I have been long in this Aussie CAD for a lot of low levels. I bought it here at equal lows around 80. In fact, this is one of my trading room documents right here. We just closed out for some profit today. So we had entries at 9,000, 89.11, 88.80, 88.05 were all entries. This morning we had price run to 90.20 to 90.50. I'm closing and protecting. There was a nice little level I was looking for at 90.20. I had my chart alarms going off this morning at 90.10, 90.15, 90.20. We had a jump and it actually ran up higher towards around 90.50 this morning. So I closed up for some profit. This was a trade that we had early on in the year that I just closed up for 484 pips of profit. So that was one. That was a nice little win for the day. The Aussie Swiss Franc was another one that here is what we've been looking at. We didn't start really buying this one until 67, 6,600. I've been very careful about adding, but I did put in a pending buy at 6,000. Now, the cool thing about a flash crash, if you have good trade sizes, is the flash crash actually filled me below 6,000. I was in around 59.40 for my entry, and this price you can see is already at 61.90. So I decided to do the following this morning. I decided to take some profit. Now, part of that is because I have a broker that offers me non-FIFO, and I had a different trade size on that entry at 6,000. So my pending order at 6,000 was a different trade size than my other orders, which enabled me to take this trade and close it in any order that I want. But here's what I'm going to do. This is a fantastic candle. Now, granted, it's a big one. This candle from high to low is approximately 387 pips. Not every trader can stomach that. Not every trader that uses big trade sizes can sit through a flash crash. But here's what I think we're seeing. Okay, I think this flash crash is either going to be the bottom and price just ends up working its way back up into this resistance zone just like we had happen back in January of last year. Here is a flash crash in January 2019. Flash crash and it recovered. Okay, flash crash, can we recover? I'm really not asking for this to do a lot. If it recovers back into previous highs, recovers back into this structural resistance that you can clearly see on my outer trend line, this has to get back to around 6,600 or 6,700. I'd be thrilled. I mean, ideally, I want this to be 7,000. But if it gets back to 66, 6,700, I'm still going to be in a lot of profit. So what I decided to do on my good trade that was filled below 6,000 was take some short-term profits and be ready to reload again. Because now this candle is sitting there and it means something, right? Here is our 1 hour candle. What I could see happening, and this is why I wanted to pay attention, this is really a good lesson in flash crash price action. This was the gap from last Friday's close to this Sunday's open. There's a gap. You can see that price is trying to fill that gap today. That's, of course, after a flash crash. But what I could see happening here is that we might come in and fill this gap. And then in the near term, we might end up going back down and trying to retest these bottoms once again. So for the trader that is neutrally positioned, you can look at this as a short-term opportunity to once again sell, stay on top of this risk-off trading, and this gives us an opportunity to sell, go after these flash crash lows, protect your profits into that momentum back down to these lows, make some money on the sell trade again. And then if you are a buyer looking for the absolute bottom or close to bottoms or bargain prices, you can wait for this to break this trend line, come back down and retest these lows. And here's what I'm looking for. Either it fails to hit the low and we end up coming just shy of the lows and going bullish from there. That ends up going back up and taking out those highs. Okay. We might come back down to equal lows where it becomes a double bottom and then it goes back to retest the high. Or we might even come back down to the lows, go slightly lower, and this would be that cleansing once again of every trader that's trying to buy this with a stop loss right there. They get stopped out of their position, and then it goes up in their favor. So we are still on a higher time frame. We are oversold. We have a lot of disagreement on the higher time frames. I can show you that on that daily and weekly. I think that's part of the reason we also have some really strong bottoms coming in. Okay, are we oversold on the relative strength index? Yes. All right, do we have a higher time frame disagreement? Here's the weekly chart. Look at this. Okay. So we have, I'm looking here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 11 candles and 9 of them are bearish. So, I mean, in that typical candle cycle, we're looking for anywhere from like 7 to 11 candles. If we have 11 candles bearish and we are oversold, it wouldn't surprise me if we use this low, okay, or use this disagreement. And again, it's not really noticeable right now. You can clearly see that price from this low to this low has gone significantly lower in price, but yet momentum remains pretty steady. We are certainly oversold on the higher time frame. So what I'd like to see is a more noticeable disagreement, and maybe that's going to occur on the daily chart. But between the daily and the weekly and that level of disagreement and oversold conditions, I'm looking for at least a corrective move to the upside. So I wanted to take some profit today on a nice fortunate fill just below 6,000. Currently that was up around 200 pips this morning, so I went ahead and took profit. I'm looking to reload back around the lows. Now we have flash crash lows that are around 5,800. In fact, this candle low is, from looking there, low is 58.13 or 58.14. So I'm looking at a chance to buy this back around 58.13, back around 58.50. Look to see if it maybe touches the low and hits the zeros at 5,800. So again, if you're not positioned to buy, you can look at this as an opportunity to sell one more time, try to retest these flash crash lows, but make sure you're protecting profits on the way down. If you're looking for the bargain trade, there's a structural low. If we come in and fail, look for bullishness. If we come in and retest, look for bullishness. If we come in and just barely go lower, look for bullishness, because it's a great structural level to buy extremely low, which leaves a lot of upside with minimum downside. So that is what I'm looking for on not just the Aussie Swiss, but also the Aussie. Yen pairs I'm truthfully going to stay away from other than scalping. I still like staying with the direction of the yen. I will overall use, here is dollar yen, for example. Okay, dollar yen is stuck right around the 102 handle for today. I still think that and this is nuts, man. I mean, 112 to 101 in the last 2 weeks. It's just taking what I've been talking about in my trading room for probably the last 6 to 8 months, which is when we see a shift in dollar weakness, we're going to see and experience a lot more volatility. And that is an understatement for what we've just seen over the last 2 to 3 weeks. There is an incredible amount of volatility. We're watching the euro dollar from 108 to 114. It hit 115 overnight. I'm looking at the dollar yen from 112 all the way down to 108 within 2 weeks. You're not seeing this type of movement. You haven't seen this type of movement in almost 2 years. But what's funny is traders are all complaining about volatility. Where is it? Where it's the lowest volatility? It's so boring now. And then here's volatility just kicking you right in the pants. And nobody likes it, but you have to be willing to shift gears. You have to be willing to have some strategies to scalp. I haven't taken buy stop trades or sell stop trades in years. And last week I find myself putting a buy stop in at 12.25 on the euro dollar and a sell stop in at 106.25 on the dollar yen. But there's that much movement where it's like I'm just getting in the way. I'm going to put a sell stop in on this pair, and if I get in the way and it just blows through my sell position, which is what the sell stop is, I mean, I'm just in the way, and the momentum just clears my level. It goes right through 106.25. In fact, the night that I put that in, we actually did a Facebook Live group and had some fun, talked about the markets. I put in a sell stop at 106.25, and I looked at the next night of trading. I was in profit to the lows at 105. I took profit around 105.25. So it was 100 pips, and all I did was get in the way. So it's a new environment, okay? Now, is this the new normal? Probably not. There is an unruly amount of volatility in the market right now, and it seems like, everybody is just pressing random buttons and the markets are going ballistic. But if you trade small, if you keep your trade size and equity management under control, you at least try to keep a level head here. Go to a higher time frame, look at the bigger picture. Look, even though this dollar yen has just dropped over 1,000 pips in the last 3 weeks of trading, where's the structure? If we fall into 100, you can see the significance at 100. There will likely be a tremendous amount of support, even if it's short term. Support at 100. If you're looking for a low risk opportunity, buy it at 100. Try to get 50 to 100 pips to the upside on a reaction trade. All right. If we pull back now to 105, look at 105 support to become resistance and see if that becomes resistance to sell back down to the lows at 100. So use the market's technicals. Even though it seems like things are wild and crazy and uncontrollable, it's amazing how technical the markets can still be. Look at oil. Okay, where did oil drop? Right back down to these January 2016, February 2016 lows. Right there. Okay, we're trading at 34 and change after a low overnight around $29. We have lows over here around $26 to $27. From a technical perspective, that's a good support level to look for some buying opportunities. If you're a trader that shorted oil, you're making a killing on this right now. But it's also a great move with an overnight gap and flash crashes across multiple financial instruments to be protecting some profit. All right. So, I've already spent about 25 minutes in this video. What I'd like to focus on would be my plan of attack. I think here's what I'm going to suggest for traders this week. All right. I think what's going to be wise for us to do, and this is my personal game plan. So again, take it or leave it. But my game plan is going to be this. Okay. Dollar pairs. And I'll say euro dollar primarily. I remain Aussie New Zealand and New Zealand dollar. I remain long on those positions. Let me move this over here. Okay, so Aussie dollar, New Zealand dollar, I remain long, and I'm going to continue to ride those out for profits. Euro dollar, I'm trying to scalp and I'm trying to buy dips. I think that we're going to go towards 1,600 to 1,700 on the euro dollar before there's really any significant drop. The good thing is it's been one of the craziest trades we've seen in the last 2 to 3 years. We have not seen this strong of a trend in the euro dollar. This is the squeeze of the year so far. And this is, in fact, the squeeze of the decade. I mean, it's 2020, so we have a start of a new decade. But euro dollar from 108 to 115, that's 700 pips. We have not seen that type of straight movement since April of 2018. So anyway, needless to say, I'm going to continue to look to buy dips and try to trade bullish on the euro dollar until we hit 1,600 to 1,700. From there, between 1,700 and 1.20, I will then start looking for selling opportunities back down. This is a very imbalanced move on the dollar, but I'm not fading it yet. I think this still has legs to the upside. I think there's great levels above at 116, 117. That's where my destination is on that currency pair. Okay, other pairs, JPY pairs. Favor JPY strength, and I'm scalping. My plan of attack on JPY pairs is to scalp. All right, so if we have dollar yen 100 is the target. If we're sitting at 102, 102.50, 10300, 10500, I will look to scalp that dollar yen down towards 100. All right. If it doesn't give me a good opportunity or it never confirms bearishness, then I won't sell it. The other option would be 100 would be the bear target for now, and 100 support for a short-term reaction. Let me try to get that correct. Support right there. All right. So if we have dollar yen targeting 100 for a seller, and we have 100 support for buyers, that's not a lot of risk, right? But you'd think of it like right now, the momentum is clearly bearish. The dollar is weaker. The DXY, the dollar index has been dropping. Bonds are going crazy between the 10-year notes, the 20-year notes. It's absolutely chaos out there, but it's creating a lot of movement in the dollar that we can certainly profit from. So dollar yen, I'm looking for shorting opportunities. Aussie yen, okay? So we'll say yen pairs and the flash crash. After the gaps from the weekend and the flash crash move from Sunday night, don't be surprised to see pairs come back and retest flash crash lows or flash crash highs. All right, so what does that look like? As I drew earlier, we might see that there is a giant candle from Sunday to Monday that's now a big indecision candle where price is closing somewhere up here by the bulls. Right? We might come back and fill that gap over the weekend from Friday's close to Sunday's open. But if we come back up with this flash crash move and we fill that gap, it might start to break down and want to come back in and retest this flash crash low. So that is a short-term opportunity to look to continue to stay bearish and try to get one more leg out of this trade to the downside. Of course, if it breaks and goes lower, then you're in the direction of that trend. All right, but try to protect those profits into those flash crash lows or into those flash crash highs. The next option would be once we get into those flash crash levels or retest of those levels, I'm looking for bullishness to appear if we have a flash crash low, and I'd be looking for bearishness to appear and confirm if we have flash crash highs. So that means if you're looking for systems, I would look for buying confirmation on a shorter term trend-based system to confirm bullish here and be a buyer. If we had a flash crash high and we come back and retest, I'd look for bearishness and confirm bearishness on a shorter term system to sell. And you're looking for a double bottom, a double top. You're looking for bullish confirmation as a buyer, bearish confirmation as a seller. So I think you can take away a lot from this overview and this weekly outlook, which is we've had a crazy weekend, a gap, a flash crash. Markets are, it's going to be interesting to see how we finish the week. Okay. Why plunging oil prices are wreaking havoc across financial markets right now. Look, Dow's down over 5%, S&P down over 5%. I mean, how many 1,000-point days have we seen in the Dow over the last 2 weeks? Just keep in mind, like 3-4 weeks ago, February, we had new historical highs. How quickly the market forgets about new highs, right? How necessary was this purge and cleansing in the market. I thought technically it was absolutely necessary. So instruments that we've talked about and traded like inverse ETFs and volatility plays, they're paying out great. But there's a time and a place to take some profit and protect. All right? Gold dropping, but still a decent hedge above 1600. Oil, we'll figure out if 27 is the bottom. We'll figure out if 29 is the bottom. We'll figure out if maybe mid-20s, maybe 25 and $20 is retested. But unless we're going to see, and this is the scary part about oil prices, I mean, with most countries in the world outside of US and Saudi Arabia, they're the only countries that can operate on these type of margins and still make money or break even. Most commodity-dependent, oil-dependent countries need $40, $45, $50 a barrel to be profitable. So the lower this goes, the more trouble this causes, the more likely we are to see some escalation, conflicts, tensions, geopolitical tensions, all these things that become very, very scary when it comes to war and conflict. But that's not here yet. But like I said, there could be a news shift right now where the coronavirus was the excuse for the market to drop and the excuse for the market to panic, and now we're seeing other things take over. Oil crisis, corporate debt, central banks. I mean, other things are now taking front and center. I'm not saying that coronavirus is going away, but there are more fingers on the panic buttons right now. So I don't think we have guaranteed tops or bottoms. I would say, if anything, we're going to have a lot more volatility ahead. That's good for us as traders. So in the face of all this craziness, there are profit opportunities. Pick your battles wisely, pick your levels wisely, absolutely take care of your trade sizes and equity management, and do the best that you can. All right, so I think if we're watching this week, this is what I'll be focused on in my trading room. This video goes live. We'll talk about this Tuesday, Wednesday, Thursday in my trading room. I'll be watching those flash crash levels for short-term opportunities to trade back and test them. If I'm holding certain positions like I am on Aussie dollar long, New Zealand dollar long, I'm just going to stay tight. If the dollar continues to weaken and we see euro dollar scalping bullish, or we're going to scalp bullish towards 1700, there's room to get there. I mean, currently the euro dollar is trading, as I'm doing the video here, at 1430. Okay, if we get up to 1600, 1700, that's another few hundred pips of profit to go after. We might not see a dip. We might not see anything more than extremes on 30-minute charts and 15-minute charts giving us dips to buy, which seems crazy, but it's very possible that we might just see this squeeze that we haven't seen for years. But this is what happens when the market does next to nothing for 2 years. You look at the euro dollar doing this for 2 years. It's not a surprise that conditions change very rapidly, very dramatically. And so, again, it's funny when traders are just complaining the whole time about how range-bound it is, and then they also panic when it does this. This is what you've been waiting for. It's just, how do you get confirmation? The unfortunate part is, unless you caught this low, which we did have trades in at 108, I didn't take it all the way up there. I canceled my 108 trade. I had to scalp this thing a couple of times to get a few pips. I am way behind on this profit from the direction that we called, which is buy it at 108, because we had a French election gap from 2017. Right? But I wanted to play it safe, and I didn't take that trade at 108. Traders that did probably easily took this up towards 110, 111, 112. Once we got into 113, 114, it's like, look, there's still room to the upside. We're probably coming back to where this started at 116, 117. So I will continue to look to scalp and stay with that dollar weakness. And I hope that also helps us make some money on the New Zealand dollar, make some money on the Aussie dollar, and we'll see if we have some trades. I mean, one basket I'm also watching is the Swiss. I'm looking for short-term opportunities on the yen. So I think we have a lot of opportunity this week to focus and take advantage of volatility. All right. So like I said, usually in these weekly outlets, I go through all these currency pairs. But I mean, if you're gonna organize it, when it comes to baskets, we have flash crashes on Japanese yen pairs, Aussie pairs, New Zealand pairs. I'm looking for dollar weakness to stay. I'm looking for Japanese yen strength to stay. I'm looking for the Swiss to remain somewhat neutral. One thing I didn't mention, but it's a new week of trading. We also have central bank discussions this week. This is the euro, which you can see here. They're forecasting to do an unchanged rate decision. Now, it will be interesting to see if the ECB starts to talk about the exchange rate. I don't think that they will necessarily. They'll probably do next to nothing. They probably won't cut rates either. So that means, again, there's still probably some upside potential as the squeeze in the big technical run continues. And we might see, and I wouldn't be shocked if we see 1,600 to 1,700 this week on the euro dollar. All right. If we also go into next week, we have the Fed next week, which is projected, and again, you can't see it here, but there might be a CME group projection where they're going to cut rates once again on this 18th meeting. We also have Aussie employment. The following week we have, or actually this week we have Swiss National Bank, which would be interesting to see, do they cut rates as well, or do they have some type of super dovish commentary that would ultimately weaken the Swiss franc, because basket-wise, the Swiss is sitting near or at or even below 20-year lows. So Aussie Swiss near 20-year lows. New Zealand Swiss near 20-year lows. Euro Swiss off the flash crash levels. I mean, we had sub 1.00 flash crash lows from 2015. But, I mean, the Euro Swiss has been neck and neck, like strong Euro, strong Swiss. They've been lockstep, which is pretty wild. Otherwise, the basket is super strong on the Swiss for right now, but I think the Swiss National Bank can help turn that corner. The following week, to wrap up the month on the 29th, I think it's the 29th, we have a pound rate decision there as well, the 24th, Tuesday the 24th, RBNZ. So if the month of March becomes a central bank cut party, where every central bank is either super dovish with their commentary and narrative, or they're going to actually take action and cut rates, the race to the bottom begins once again. And the race to the bottom and all the mechanisms that we had since 2008, 2009 are showing back up in full force. I think this is also what kind of creates those bottoms, creates those turning points, creates those major pivots in the market where we look at, recoveries, retracements, corrections. And keep in mind, we should have additional volatility and trend cycles for the next couple of months. So a lot to digest, I understand. Be careful out there in your trading. Don't be overly aggressive unless you want to pair that aggressive trading with precision. I mean, I'm all about being precise and having bigger trade sizes, but I also have to have an exit plan. If I'm looking at big levels to buy and sell from, I have to keep those trade sizes very small. All right, so on that front, make sure you watch my video this week. I'll try to get that done and officially edited and posted for my YouTube channel. That's Best Trading Strategy. Keep it seriously simple. I'm going to be talking about probably the most important lesson that I can give to a trader, and that is trade size, equity management, and trade size, leverage, margin. All those things come into play, and it's experiences like this. I mean, for me to close up for 1.5 to 2% for a day on a pretty big account, I mean, that's a good chunk of profit off of levels that I've been waiting for. And I was fortunate to get filled at lower lows than I wanted to buy and higher highs than I wanted to sell. That's good. All right. But those levels are planned out way in advance. And even with the market's flash crash movements, it still has some element of technical obedience. All right. So watch those flash crash levels. Let's have a good week of trading. If you have any questions, give me some comments out there. Facebook, YouTube, Twitter, Instagram. I'm available. Okay. Talk to you all very soon. Have a great week, everybody. Take care. Bye.